Hello to all traders and welcome to another video, Idle Waves on Cryptos, where I will be analyzing the top pick. Well, that's not of the day, it's of yesterday, but we're going to analyze it today using Elliott Waves, of course, yeah. Um, there is a huge demand, and we can actually also see the price have really surged. I mean, I don't even remember if it was like a week ago or so, or a couple of weeks ago, that it was back to 3 cents, and now it's 34 cents, guys. This is crazy, right? Now, before we go in, just pay attention to that the data that I'm using on TradingView, they start around here. So I will draw something, yeah, on the charts to count and balance for the data that we missed from Binance. Okay, so we were up at yeah, around 20 or something. So we had something like this. Yeah. Now we need to get started. Obviously, logarithmic chart. Yeah. So I will get started by the data point that I've just created. Yeah. And then we will go to 2, and then we'll go to 3, to 4, and to 5. I will explain why I think that is the case. Yeah, and where 3 is, where 4 is, well, if you want 5 as well, that'll be a bit too high. I don't want to sound too optimistic, but this chart looks very, 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 very impulsive. Okay. Now, what do we got here? We've got a lot of bounds between 3 and 20. Sorry, and yeah, 2 cents over here for quite a while. So I figured, due to the structure that we are facing here, yeah, this only makes sense as a W, X, Y, and Z, okay? Which means this is a triple zigzag in correction wave 2. Okay, so we've got the W, we've got the X, yeah, you've got the Y, the X, and the Z. This is a triple combination, guys, okay? So actually, it's the combination. I will be more accurate. It's not a zigzag. But anyway, I'm not going to go into details. So over here, we've got a zigzag. This is a flat. This is a triple zigzag within the zigzag. Yeah, but actually, I'm a wave of minute. Yeah, excuse me. That is correct. And then we've got a triangle here, guys, because in wave 2, first of all, we cannot have triangles. You can only have triangles in wave 2 where they are part of a combination, and we have a combination, right? Now, the thing is, wave Z over here, as you can see, is clearly not the lower low of this chart. So you wonder, why do we have wave 2 here? It is because, as well, it's the triangle, when it's part of a complex pattern, it's the only pattern we can include as an ending part of a wave 2 that, or wave 4 in that matter, that is above the previous low. Okay, is the only case here. Okay, and obviously all this is accumulation phase, yes, and then shoot higher. Now, what am I seeing in the shorter term? We've got 1, 2 here, 3, 4, another triangle, and a 5, guys. Okay, which is very clear for everybody. I want to assume you can see that. Yeah, this is an impulse wave. Yeah, we've got a triangle over here in wave 4, which is very usual to see. Yeah, and then another impulsive move to the upside, and then we've got 1 and we've got 2, and this impulsive move, we always love that to be a wave 3. Yeah, obviously this is in the higher degree. Yeah, so here's what we see. Yeah, and let me go a little bit further down now so that we can really see what is happening. So here's what I'm going to do now, guys, because markets move structurally and fractally, so we need to see what levels we have had in previous impulses, and then move on upwards with a repetitive scale, right? So let me, oh, okay, 6 and 3, interesting. Okay, so we've got the 300 Fibonacci extension for wave 3 from 1 and 2, and the 900 Fibonacci extension of wave 1 and 2 is at 9 times, right? So that means that wave 3 is 3 times larger than wave 1, and wave 5 is 3 times larger than wave 3. This is crazy, guys. You see the extension in wave 5. Now, if we assume we're going to see a similar move, yeah, in the higher degree pattern, which is the green one, yeah, then we'll have to go from down here again all the way up to the 0.068, which is where green 1 finishes, and then down to green 2, which is where it's finishing, yeah. As you can understand, yeah, we finished the 300, okay. We're moving up. We just did the 600, and then I believe personally, guys, that we're going to end this green wave 3 at 0.5758 or so, 60, let's call it 60 cents, because sometimes with a logarithmic chart, you know, we can take out a few cents or dollars depending on what sort of coin we're looking. So we did the 6 at 39. Where are we going next is the question. Well, because we're moving in structures that there are multiples of previous structures, what I want to do here between the 3 and the 6, I want to add the 4.5, okay? And the 4.5 is going to give us a good idea, okay, that 34 is the level that we need to really break, okay? You can see that, okay, which is currently where we are. So we might see prices consolidating here a bit because we've got 1, 2, 3, 4, 5 over here already. But because we've got another move on the upside, I believe this is 1, 2. This is 1, 2, 3, 4, and 5. So we're going to get 3, 4, and 5. Anyway, I'm not going to go into more details about this, but here's what I'm going to tell you for the short term. Yes, we are currently trading at 34. Okay, so 30 is the level I would be looking for a bounce. Yeah. And we might see the 57 where wave 3 is going to come in. That doesn't necessarily mean that we're not going to move lower and we're going to move higher up straight away, okay? It could be a case where this is 1, 2, 3, 4, and 5. We finish, then this is 1. Then we've got 1, 2, 3, 4, and 5. We'll go even higher, okay? Or it could be a case where this is 1, 2, yeah? We've got 1, 2, 3, 4, and 5, then 4, and then 5. In either case, guys, it's impossible to say how the markets are going to move in the very short term, right? But 39 is a very strong level. And then once we break that, we're looking at 57. On the downside, 21 is a very good support, yes. And then, as I said before, in between, yeah, in between we've had the, where's the 4.5? We've got the 30 cents, okay. At the moment, we remain bullish as long as we are above the 30 cents. A break of 30 could take us down to 21. A break of 39 could get us up to 57 with a very nice stop perhaps at 7.5, which seems to be what the current market structure and the fractals are suggesting at 0.48. Okay, so guys, I hope you enjoyed this video. I want to see you commenting on the comments section. Ask your questions. I'll get back to you as soon as I can. If you think that this analysis deserves a like, do like the video, subscribe, turn your notifications on because there's going to be more updates coming in as long as, of course, there is demand for those. So thanks for watching and we'll speak again soon.